Hello, everyone. We've been doing this show for a year and a half, and this is the first time we ever knew there was a countdown clock. Welcome to the Passive Investor Show. I am Bill Fairman, Wendy Sweet, and Jonathan Davis. Good Lord. I'm tripping over my tongue this afternoon. They're waiting in the wings. If you guys have been wondering how the note business has been affected during COVID and with the lower interest rates that are being offered, we have a special guest, Joe Varnadore with NoteSchool, coming right up after this. So today is all about notes. If you were on an earlier show, we had Jay Connor on talking about how to find capital, and actually kind of training people to be private lenders. And in this show, we have Joe Varnadore. We've known him for years and years. He works with Eddie Speed and NoteSchool, and this is a different part of lending. This is the best part of lending, actually, in my opinion. This is lending where you don't have to do anything but buy an existing note. All your work is already done. You just have to do the due diligence on what's left. Right? So we are Carolina Capital Management. We are lenders in the Southeast for real estate investors. If are you guys hearing me okay?
Yes.
Yeah.
Keep it rolling.
You're doing great, Bill.
Well, I was looking at you and you guys were kind of doing the robot thing over here. So it's kind of freaking me out. Anyway, if you are a borrower and looking to borrow money in the Southeast and you are a real estate investor, go to carolinahardmoney.com and click on the Apply Now tab. If you are a passive investor looking for passive returns, click on the Accredited Investor tab. Don't forget to like, share, subscribe, and hit the bell. Also, which is very important, Wendy gives up her time every Wednesday, and we call that Wednesday with Wendy. Okay, so Wendy gives up her Wednesdays, but she's booked out a few months in advance. Go ahead and get on her calendar. She will speak to you for 30 minutes about anything.
September, right?
When?
September 29th is my next open day that I'm getting bookings for now.
Excellent.
So and it's worth it. I'm telling you that we do. Sorry, folks. We have a delay going on here, and he can't hear us talk, and we can't hear him. Go ahead, Bill.
Okay, so I'll make this transition nice and easy. We also have a comment section on the side. That's where you can find Wendy's link to her calendar, as well as if you have any questions. Look there it's on the right side of your screen or underneath, depending on the platform that you're viewing us from. And did you guys have any information on any breaking news? Because I don't have any breaking news. Sorry. We have a really nice graphics that come up that say breaking news, but I don't have any.
Well, our breaking news
is on the first show. We did it already.
And Joe, our guest here,
It's broken news.
No, he has some really good news for people. So
That's right.
All right, perfect. Well, without further ado, let me introduce Joe Varnadore from NoteSchool. Thank you so much for joining us, Joe.
Well, hope you guys are well. Wendy, Bill, Jonathan, thanks so much for having me today. Have you guys heard that real estate is on fire?
I've gotten some hints.
Just a little bit.
Oh my goodness, it is It's amazing times, right? And what is it the old Chinese philosopher said? May you live in interesting times. And folks, it is certainly interesting times, right?
Absolutely.
Absolutely.
So, kind of give us if you don't mind, just give us a couple of minutes on your background, how you got involved in the note business, and then kind of give us an update on what's going on with notes, because we know there's been a moratorium on foreclosures and that type of thing, and how that's affected things.
Yeah. Well, I was born at a very early age, and right? No, Bill, I got into real estate. I was 19 years old, and it was late 1978. So that kind of dates me. And I started, did my first fix and flip and did all of that, and found the note business in 1990. And certainly it changed the way that I looked at everything. Like you said, we could go out and buy a note, and we could just be the bank instead of having to be the landlord or to go out and do a fix and flip and all of that. We could still make money now and money later and cash flow and all that good stuff. So it's I've been doing it for 30 plus years now in the note space. And then Eddie and I have known each other a long time. Eddie Speed, founder of NoteSchool, and we got together in 2013. And as they say, the rest is history, right?
Yeah, absolutely.
So we every the end of every month we do a kind of an industry update as far as what we know is going on in the real estate and in the note and mortgage space. Right? I know that if people didn't know that right now is a great time to be in the business if you know the right strategies, right? With creative financing and hey, guess what's back, ladies and gentlemen? Non-performing loans.
There's a shocker.
Our update that we did last week with our, with some slides and so on. So if you want me to show those, that's great, or we can just talk through everything.
Listen, I'd love to see the graphics, because I know you guys work hard on those things.
So whenever you're ready, I will. Sharu brings it up. I will be ready to rock, guys.
Excellent. Sharif, do you have that? Or do you need me to help you with anything?
Yes.
No. Hey, John. Yeah, I need you to share your screen again.
Okay. Did I unshare my screen, Sharif? My gosh. You think this is the first time any of us ever did this, right? Okay. So we're going to go here, and we're going to go here, and we're going to go here. Of course, they have no idea what I'm talking about, right?
well, I do, but it's the first time for me every time.
Right. So there you go. Right. So can you let me see here. So what do we have? We've got slideshow. We've got from the beginning. How about now? Can you see this?
Yep. You're ready.
Yeah.
Very good. So guys, we'll make this. And again, if I'll send these slides to you guys, if any of your folks want them. So as we know, well, pardon me.
I said, yes, please do send it to us. Yeah.
Okay, I will.
Love to have these.
So mortgage rates, right, continue a downward spiral, right? I haven't checked this week, but they are down a bit. We can see that, the 30-year fixed, and I'm going to get my pen here so I can be really fancy, guys. The 30-year fixed rate over here is 2.78. Here's the ARM, the adjustable rate, but look at the 15-year rate, right? So it is, never been lower interest rates, guys. So again, we said real estate's on fire. So we go to the next slide here. And guys, Wendy, Bill, Jonathan, mortgage credit availability index. This is how easy that it is, or how difficult it is for folks to go out there and get a new mortgage, right? So rates are way down. And so we look over here in this column here, right? This is kind of when the pandemic started. So mortgage credit, and this is put out by the Mortgage Bankers Association, right? We're just not making this stuff up, was somewhere in the mid 180s, right? So pretty simple to get a loan, right? So we see that, boom, it just drops off a cliff, in June of last year. And then and then boom, look, in the first part of this year, it starts to come back up. And this is the latest stuff, right? Now it has dropped down to 118.8. What does that mean? Well, if you wanted to go out and get one of those 2.78% rates or 2.12% rates, it's going to be a little more difficult for you, right? The average profile of someone that's going to get that low rate now is you're going to have a credit score of north of 750. You're going to have to put at least 20% down. And you're going to have a debt to income ratio of overall of no more than about 35%. So yeah, the rates are like that, but hey, rates are low, but it's harder to get them. And then we look at this, right? 2 days ago, purchase of luxury homes surge. Luxury home, 1.25 million, 1.025 million. It's gone up 25% year over year. I'm sorry, median sales. Look at that, 88.2%. Those have gone up, and they've gone up across the board, right? Expensive here, mid-priced here, here in the affordable, and then the most affordable. So guys, we know, right, that real estate is on fire. Everything, those indicators are there. Days on market are down. All of those crazy things are happening out there in the market. The opportunity for folks like us, for you guys and for us in the note space is that those folks, those 30 or 35% of the folks that could get a loan last year, that have money to put down, they have good credit, they just don't have stability of income, can't get a regular loan. So what does that mean? Well, that means we show them how to do a creative finance deal. You guys loan them money to go out and do that. And we know that the interest rates on non-qualified mortgages, right? Those are qualified mortgages, those low rates are in the 6 to 10% rate at a commercial bank. So, opportunities, yes. So we see that side of the business, and we see that according to Redfin, investors snap up more single family homes during the pandemic, right? So investors are just out there and they're looking, look, that's up 16.1% on the multifamily, or the multifamily is up here, but this just continues to tick up, right? So investors, typically investors that are buying, less than 10 houses a year, 10 houses or less, well, they're jumping in from multifamily into single family again because, well, everybody thinks that's the way to go, right? So then we see that side of the business, and then we see the other side of the business, right? And this was from 10 days ago or so when Wall Street Journal reported that, wow, end of eviction moratorium coming up. 8 million landlords own 1 to 10 properties. And we know that, well, most of those haven't received rents for quite a while. So what happens on last Friday? Monday. CDC issues new eviction ban effective through October 3rd. Guys, look at this. 11 million Americans are behind on their rents, and as the Delta variant surges. So we've got real estate on fire up top here, and then on the other side of that, we've got things like this happening. So here's what we know. Here's the kind of the underbelly of all of that. Landlords are owed $55 to $65 billion in unpaid rents. The states have received $47 billion, right, Wendy? You go,
Yeah.
$3 billion of that has been distributed, right? And this has been out there for a little while. 1.74 million loans are still in forbearance. Right now, they're not all of those will end up, going into foreclosure, but a pretty good percentage, right? 2 million homes are somewhere in some state of default. And so that's, we're bumping up there around 4 million. And guys, think about it like this. At any given time in the U.S., there are 53 million single family first mortgages. So, that's a pretty high percentage of that, right? That's about almost 8-9%. Now, here's the crazy thing, right? People thought that everything was going really well prior to the pandemic, and talked to Chaz Gwynn from Revolve Capital yesterday. And there are 5.5 million legacy non-performing loans in the system, which means they predated the pandemic. Can you believe that's crazy, isn't it? Wow. So when I say non-performing loans are out there, they're there. And this is, this sounds good on one side, right? 91.8% of borrowers made their monthly payments last month. But that means almost 8.2% didn't, and that represents millions and millions and millions of non-performing loans. So, it is an amazing time out there in that. What is it that's what can we say about that, right? There is an opportunity in creative financing. There's an opportunity for all of us, Bill, in this non-performing space that's popping up as well.
You're muted.
Sorry.
You're muted, Bill.
Yeah, I know. I just like moving my lips. This is what really gets to me, is that the CDC does not have any authority to put a ban on evictions. Right?
I didn't get into the political part of it. I was going to let you do that.
The president himself stood right up on a podium, and Wendy, you need to put a battery in that camera because it's getting ready to go away.
I'll do my best to make that happen.
Yeah, there's that big red light blinking between the two of them, right?
Anyway, the president stood right up at the podium and said, yes, it's probably not legal, but by the time you go through your judiciary to fight it, it's going to end anyway. But the way things are going, you might as well go ahead and fight it, because they'll try to extend it again.
I said it, and so I was thinking Monday rolls around, we were getting ready to do a podcast, and by God, it came through, right? 4:30 Monday afternoon.
But see, and here's the thing, and I get why government wants to protect consumers, but no one cares about businesses, small businesses. Small businesses get killed in these circumstances because your bigger businesses have the lobby. They have plenty of capital. It's the small mom and pops, landlord and businesses that get smashed in these things. Nobody cares about those folks. Most people that own rental property have a little bit of leverage on it. If they're smart, their leverage was fairly low. But the way things are with interest rates being so low, a lot of people took cash out to buy new properties with. and, I get that. And that's one of the things I try to tell people all the time that are owning single family: get as many of these really low cost mortgages as possible. But please, whatever you do, don't go above 70% in your leverage, because you never know what happens. You need to keep some equity in there. Now, the good folks that I understand that are renting out properties and had good communications with their tenants, most of those people are all paying. But I do really feel sorry for the landlords who are they're going to end up losing their properties, and there's nothing they can do about it. And it's all government mandated.
That's right.
Well, imagine that 47 billion that's been sent to the states, and 3 billion has been distributed. And this just didn't happen yesterday. The states have had it for a while.
Yeah. And you're wondering, what the deal is. Do they not have the personnel to put it out there? Or are they just hanging on to it for themselves? Because they legally, they can't spend it on anything other than rent assistance. Right. So why are they holding on to it? But if you also look at the court system, everybody's backed up. They just don't have enough people to handle a lot of this stuff. So the problem that is people not paying is also an opportunity for others.
Yes.
And if you kept your powder dry, so to speak.
Oh, that's an Eddieism, right?
Yeah, I'm trying to work a few of them in there, but
There you go.
I don't
Well,
have
you know,
the
Bill,
same-
that's as cool as the backside of your pillow.
Nice.
That's
I just don't have the proper twang when I say
right.
it. Wendy, Jonathan, you got any questions for Joe?
No questions. I was going to make a comment now on the CDC extending that. I think if I understand it correctly, the way they have, somewhat circumvented the prior ruling is that they're only extending the moratorium in quote hotspot areas. And what does that mean? That's really up to their discretion, I suppose. But yeah, that's how they're skirting it right now. So take that whatever it is. But yeah, it's we have people, we have institutions overstepping bounds to do certain things. And when I say that, I don't mean that politically. I just mean like, as how our government is structured, it's an overstep for sure. But yeah, we have all these people doing this, and when you have to wonder why and for what reasons. I think it's easy to say like we want to help those who need assistance, but when you help those at the expense of others, it's it is that help. So my personal opinion, we're kind of doing it a little backwards.
Yeah, I think the biggest problem too, why that $47 million is sitting there, or billion, sorry.
Yeah, billion.
It's because they haven't done a very good job of telling landlords how they can get that money.
Right.
They're
And there's
not
strings attached,
showing.
Wendy.
So what are they? Do you know?
Well, there's audited financials, as to what they're really doing, and when the typical landlord owns 1 to 4 single family homes, they're just trying to stay afloat.
Right.
They're not professionals. What does it cost to
Right.
get an audited financial, guys?
Yeah. Cost us
Yeah, I mean, most
$35.
of the guys that we deal with that have 1 to 4 homes that are rentals, I mean, if I ask them to produce a P&L, they would say, "What's a P&L?" So like they don't have that sophistication.
Yeah.
You're right. You're 100% right there.
And the opportunity that we see, Eddie coined it, guys. Burnout landlords, right?
Yeah.
There are a lot of burnout landlords
Right.
out there right now that want to sell and want what you guys, this show is all about, and that is passive income, right? Why did people buy a rent property? They wanted passive income. But did they ever get passive income? No. But boy, if they can sell it to us and we can resell it on a wrap note or subject to or whatever, there's an opportunity there.
Yeah, you can still
That's
get
right.
passive income.
You heard it
from
here.
the- Right.
Bill, I was
We-
going to say
we
you heard
like-
it here.
Yeah.
well, am I
You see
supposed to be
Jonathan
jumping
moving
in?
over here? That means he's trying to talk. So zip it.
Say, sell your property to Joe and them or your note.
Your
Let them
note,
work with it and put your money into our fund.
Yeah,
I think it kind of works.
that's right.
Well, passive income is beautiful, baby, right? It's better to be the bank.
That's exactly
Joe, do me a
right.
favor.
That's exactly right.
I was going to say, Joe, give the audience information on how they can get involved in Note School. You guys have, 2-day, 3-day classes?
Well, we have 1-day classes, and we have then we follow that up with a 3-day class, and you can certainly go to noteschool.com. There you go, and check us out. And certainly, we would like to have you on our show. Watch our show. It's Note School TV, and we have our own YouTube channel as well. So it's Note School TV there on YouTube. So check us out there. But yeah, we would love to we'd love to talk to you and share what we do with you as well. So yeah, so thanks for that plug, guys.
Sure. Well, listen,
Well, and-
Wendy and I have been in the mortgage business for over 20 years, and the time we spent at Note School ourselves blew our own minds. There's
That's
there's a
right.
lot of stuff that we should have known that we didn't, and we thought we knew it all, but we don't. That's why we're always in masterminds.
There you go. Well, that's right. You certainly are.
Well, he thought he could. In fact, I think I went to Note School 3 times before it finally gelled. Listening to all the things that you do, it really took me 3 times to go, and it was it's just so it teaches you the craft of putting notes together, whether it's a first position, second position, whether you're selling a note, doing partials, the different ways you can set up partials. It's crazy. It's truly teaching you how to craft the deal, to be an architect of that deal.
That's right. And now, of course, part of what we're teaching is how to borrow money against a loan, right? Hypothecate, Bill. That's that $20 word, right? Pledge the
Big one.
loan, collateral, and borrow money, right?
If I use it now, do I get it for 15?
Yes, you do.
That's right.
There's the one thing I can say about learning from Note School is that there are very few deals that you can't make work when
That's
you
right.
understand the note business.
Yeah.
It's not the constantly having to put the round peg into the round hole. You can
Right.
find other ways to make things fit if you understand the note side of things. So
For sure.
Joe, I appreciate you coming on the show. It was great seeing you again. And
too.
yes, we would love to be on your show.
Good. Okay. We would love to have you. We will make that happen. We're doing non-performing notes this month, but let's talk about next month. I'll get with you guys.
Perfect.
Sounds great.
Yeah, September, right? It's going to be Christmas before long.
That's the truth.
I hope so, because I'm tired of this heat. All right, folks, thank you so much for joining us on the Passive Investor Show. I am Bill Fairman. This is Wendy Sweet and Jonathan Davis. I'm sorry. It's the Passive Accredited Investor Show. Good Lord. Yeah, we've been doing this a long time. I can't even get the name straight. We are Carolina Capital Management. We are lenders in the Southeast. If you are looking to borrow money and you're a real estate investor, carolinahardmoney.com. Click on the Apply Now tab. If you're a passive investor looking for passive returns, click on the Accredited Investor tab. Don't forget to like, share, subscribe, hit the bell. And again, Wendy gives up 30 minutes of her time. Well, it's not 30 minutes per person on Wednesdays with Wendy. Don't forget that. There's the link to get on her calendar. She's out to end of September booked, so get on the schedule now. Folks, thank you so much for joining us. Have a wonderful week. We'll see you next time.